So Joseph, as the cold winter approaches, we have the IPO of a skiwear, Milan-based skiwear company. Tell us about Moncler.
Yeah, you mentioned skiwear, but Moncler sees its future in selling city wear, like these nice warm puffy coats, which can retail for $1,500 or more, to much warmer climates, from Miami to Taipei to more traditional places like Aspen or Chamonix. So it's a very interesting sort of growth profile if you're looking at the luxury sector.
So what's the investment case for a company trying to sell very warm jackets in hot climates?
It's a relative minnow compared to the likes of Prada or the other big luxury IPOs that have come to the market in the last 2 years. Moncler had earnings last year of about 600 million euros. So we're not talking about the billions that Prada or Hermes, for example, can command. But they've had very high growth at a high margin. They've been adding about 20 stores a year. And like I said, not just in cold places, but warm spots like Miami and perhaps in the future Hawaii, which sounds crazy. But a gross margin of about 70% does not sound crazy. If you're selling a $1,500 down coat, that's a nice big markup, and goose down feathers do not have a great deal of cost price inflation. So I mean, that is the buy case here.
But somebody is selling, as ever in an IPO. Is this Moncler raising new money to fund growth, or is it existing shareholders selling out?
Yeah, I mean, the guy who rescued Moncler, someone called Remo Ruffini, who owns about a third of the company, he's not selling. He has quite an interesting story, because Moncler used to be a very sort of cheap and, to be honest, nasty Italian sportswear company, and he's since renewed it to become this high growth, high margin super brand. So he's there for the long term. Private equity have joined Mr. Ruffini on that journey. Cotterill currently owns a fifth. Eurozone, a French investment company, own about a half. Overall, they'll be halving their stake, so they're not kind of selling out completely. And so when you look at the range of the shares being quoted, which is between about 8.7 euros to 10 or so euros a share, they could possibly get away at the top of the range. That would imply a valuation of about 2.5 billion euros. But I think, given the risks of a fashion brand, and the growth is uncertain when you're coming from a niche, it's maybe more for the middle of the range. So perhaps 2.4 billion. Basically, it's great, $1,500 jackets, fantastic. But if they become bling, or they lose that very exclusive reputation, the growth and the profitability outlook becomes a bit clouded.
As ever, for luxury companies, much depends on them keeping on top of the fashion. And I think what's interesting about Moncler is that its projected growth is as much in the States, or even more in the States, than it is in Asia, which is where all the other luxury goods companies are expanding. We'll see how its IPO goes in the coming weeks. Joseph, thank you very much.